Okay, I'm recording this video after the close of trade Friday, the 14th of May, and a huge couple of days on the market. Just want to recap some of my Emini charts. First of all, just show you the daily chart. This is the Emini continuous contract, just daily data at es.d on TradeStation. And after we had the sell-off on Thursday a week ago, we put in a cyclical low on the daily time frame. But I was saying that I wasn't convinced that that cyclical low meant that we were in uptrend at that point until we had seen a completion, an end of trend move on the lower time frames. So let me just show you what I was looking for on the lower time frames, specifically the 45-minute chart. If we look at the 45, we had a bounce on Monday with the news from Europe about the $1 trillion bailout, and we formed this pullback and a downtrend move. We'd broken at the beginning of the month into a downtrend with this breakdown below this critical support level here. So we're technically in a downtrend until we get an end of trend warning signal here. So we bounced up on the Monday, formed a pullback and a downtrend move because we're under this kind of cyclical support level up here, which turned into resistance, and then we formed our cyclical turn after that. Now, this hasn't actually printed with an end of trend signal text on the chart here, just because this pullback level was actually violated over a couple of days. And so that for me is not a clean end of trend warning signal, so that's why it's not printed the text on the chart here. But this is the cyclical turn after a pullback and a downtrend that I was looking for. It also, you can actually see it on the higher time frames. So if we go up to the 81-minute chart, which I think is the last one I put on the website, you can see here, same thing, broke below critical support. We've had our pullback. We violated it slightly here with this little dot above the resistance level, and here's our support level just printed. The last bar on Friday's trade put in that cyclical low, that little red dot there at the end of the day. If we go back up one chart more to the 135-minute chart, similar thing. Here's the resistance, the cyclical resistance level that we were putting in here, and there we've put in a cyclical support level here. So I'm beginning to be looking for the end of this downtrend to be in place. And it's interesting that if I go back to the daily chart, I was talking about how these levels with the sell-off, this gap is going to be critical kind of going forward, and you can see that that gap has now been filled on this daily chart with Friday's activity, and it was unlikely, you know, after the huge gap on open Monday and then the strength we saw Tuesday, Wednesday, Thursday, you know, that this was going to continue without that gap being filled. So I think a lot of traders were looking for that. There was going to be underlying weakness and instability in the chart until that gap was filled. So we had been filled at that point there, and certainly on Friday's activity, from what I was seeing, there was a lot of kind of divergence signals and some reduction in the speed of the decline. So we might be seeing a bottoming process taking place early next week. So let me just show you the longer term chart. This is my 40,500 tip bar chart. This is over the last 5 or 6 days trade. So this was the large sell-off that we had on the Thursday. The bounce we had at the end of that day, and then this is Monday's gap open, and you can see we've been playing between these cyclical resistance and support levels on the 40,500 bar charts. However, what's interesting is, you know, the exhaustion buying volume happened early on in the week on the Monday, and ever since then, this is Tuesday's trades, Wednesday's trade, Thursday's trade, and finally Friday's trade. You can see just a reducing amount of buying activity going on, the better momentum indicator with these bearish divergence signals in here. And you can see the top here, I particularly like these bearish or bullish divergence signals when they happen really close to the zero line, because what's happening there is the indicator is just showing that the market is kind of an absolute balance and ready to tip over to the other trend direction. So exhaustion buying at this point, less and less buying as we're going into these new highs here with these bearish divergence signals. And finally we come up to a critical support level, cyclical support level here, just about above 1160, and once we break through that, we're actually in a downtrend. So until again we form a pullback and an end of trend warning signal on these higher time frames, we're still technically in a downtrend at this point. But you know, because these are lower time frames than the 135 or the 81-minute chart, I'm expecting these to form some kind of end of trend signal sometime during probably Tuesday, by the time these things kind of wrap out. But just want to show you something that I often notice in charts. We get large trend moves when we have cyclical support or resistance levels being broken where they're very close together on multiple time frames. So just looking at my highest time frames, this is the 40,000, and you can see this cyclical support level here at 1160 on the Thursday that got broken. We got into a large trend move. If I go down one time frame to the 13,500 tip bar chart, there's that cyclical level. I mean, totally different calculations here because there's different time frame for the cyclical support and resistance levels. But again, it's showing up at about 1162 here, cyclical support, and as soon as that is broken, we go into a large downtrend. And then if I go down to the lowest time frame on this combination of charts here, the 4,500 tip bar chart, this is Friday's activity, this is the open on Friday, going back to Thursday's trade again, there's that cyclical support just above 1160 at about 1162. And my theory on this is once we get these cyclical kind of support resistance, for example, coming very close together on 3 different time frames, once that support level is broken, there's nothing to hold that move in a higher time frame. A lot of these trend moves get stopped or caught, in my terminology, by a cyclical move happening in the next highest time frame. But if that cyclical move is not available to catch that trend, to catch that overshoot, let's say, of a cyclical support level in this case, you end up with a large trending move because the cyclical support's kind of gone away. So just want to point that out because I do see that frequently on my charts, and it does kind of point to large moves. If you want to get on top of large moves, that'd be something I'd be looking at for on a consistent basis. So anyway, that's what happened with Thursday and Friday, breaking through this level here. When we look at the 13,500 tip bar chart, you can see coming into the bottom here we had a pullback and an end of trend, and that kind of, for me, signaled where this move was likely to finish. So we'd had exhaustion selling coming into the close on Thursday. That selling continued during Friday's activity, but look at all these bullish divergence signals here with these red dots, just showing you that the rate of decline was decreasing as we were coming into these lows, and then we kind of hit some kind of almost balance point here where we're just going backwards and forwards around the zero line here. We form an end of trend warning signal here, and that for me starts to suggest that we're going to have a bounce early on Monday. And the next point of resistance is going to be where we form a pullback and a downtrend here on the 40,500 tip bar chart. So I'm looking for some strength early on during Monday, going into this kind of turning point sometime on Monday, maybe early Tuesday, who knows, and then a resumption of the downtrend in order to flush out this, test these lows and make sure that the bottom is actually in before seeing a resumption of kind of a medium-term uptrend. So that's just some Emini charts, just to show you what's happening on the commitment of traders numbers. Those numbers came out on the Friday, so I'll just pull up that chart. The net numbers from the beginning of the week was professionals were net long 2.4% of total open interest. And you can see here that the better commitment of traders oscillators now come back into the buy zone at negative 128 here. So we had a nice cyclical turnover here, showing that we were peaking out in terms of the market here. We've kind of rapidly kind of come down. We had the flash crash on Thursday of the week before last, and we've come into the buy zone here. So I'm going to be looking for some bottoming during this week and seeing if we get another push up into this following some bullish kind of commitment of traders type data here. So we might see some strengthening in the market over the next few days and a bottom being put in. I'm not suggesting that the uptrend is going to continue. I still think what we're seeing at the moment with this extreme volatility is at the end of this trend cycle that we've had for the last 14-15 months or so. So this kind of extreme volatility at the end is a good opportunity to large kind of trade ranges to play, but ultimately I think they're going to end up in a topping movement for the market and then a resumption of the longer term kind of downtrend. So there we go. Enjoy your weekend and good luck with your Emini trading next week.